Is QE3 the next rocket that propels the S&P 500 Index to 1550? Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market report for Friday, the 7th of September. Back in late August, we suggested that the markets would return to a more normal state with more trading volume and activity when traders return from the summer vacations. Well, the comments out of Europe from Mario Draghi, head of the ECB, certainly propelled the markets and September off to a quick start. Yesterday's market action was a combination of new buying, but in large part it was the move higher was created by shorts covering their positions. Another big call out yesterday was the move in the precious metals market. We are seeing follow-through buying today in both gold, silver, and copper. Make no mistake about it, we are in bull trends in these markets. We're looking for all three metals to be strong for the next 6 months. Look for the markets to close well today, as traders will be wary of taking home any short positions over the weekend. This may be the perfect weekend to employ our 52-week high rule to any market that is making new 52-week highs on the close. Now let's go to the charts and our trade triangles and see what's happening. Lots going on today, so let's get started. So let's go right to our portfolio manager, and we're going to go right here. And as you can see, we've got some big changes in some of the markets, mainly in the euro, which is now plus 100. In fact, let's just score these little puppies. You can see basically the SP500 is a plus 100. Only the Dow is not good yet, but the NASDAQ is positive. You've got crude oil, definitely not in a bull market, but everything else is in a bull market. Really a big change here psychologically. We had signals excuse me, we had signals in the euro excuse me, we had signals in the euro and copper today. So let's go right to the charts without further ado. So here we are, we're looking at the S&P 500, and here's our buy signal that we had on the 16th of August, indicating that the trend was higher. And of course, we've just seen new highs today in this market, and it looks really good to us. So we're looking for this market to move significantly higher. We scoped this out yesterday in terms of, we thought this was a very large energy field that's capable of propelling this market much higher. Here's what we looked at yesterday, and this is the sort of takeaway. Here's the big base. We've broken over this base right here. That was yesterday, and it looks like we're off and running. We have a 1550 target zone for the S&P 500. So let's call it what it is. It's a bull market. We have a plus 100 indicating a very strong upward trend. So don't be short this market at the moment. Let's look for any pullbacks to be a buyer. If you're not already in this market, you should be. And we're expecting this market to lead the way. So let's clear the screen, go to our next market. And the next market we're looking at is going to be the Dow Jones Industrials, and unlike the other markets, we have not seen this market give us a positive signal. We're down on the weekly and the monthly, so still in minus 65, more of a trading range here. We talked about this a couple of days ago about being long the S&P and short the Dow, and that's pretty much where we want to be right now. So I think for the most part, we are looking at this market in more of a trading range. It's going to lag, not lead. And the one that's going to lead is going to be the S&P 500. So let's go to our next market, which is the NASDAQ. And of course, the NASDAQ has enjoyed some movement here. Looked very good yesterday. Big move up. We are at new highs. And of course, I think we're going to close higher today as well. Now, the only concern, of course, is we're a little bit overbought. But generally speaking, we have the same pattern there as we have on the S&P. And this is this large energy field that I think is capable of carrying this market much higher. So let's see how that works out. But generally speaking, the trend is up. You've got our target zone right here, and that is definitely a plus 100 right there. And I think that tells the story. We are going higher in the equity markets. So remember, we talked about perception is very important. Now, maybe the economics don't look that great right now, with some guidance coming out of some certain companies that don't look that promising. But the market is a forward-thinking mechanism, and the one psychological thing that you have to remember, it's perception that drives the market, not so much fundamentals or technicals, but the perception of what people think the markets are going to do. So let's clear the screen and go to our next market. Next market we're looking at is going to be the crude oil market. Now the crude oil market, remember, let's go back just to like a 6-month chart so we can get or a 3-month chart just to get a closer look. If you remember the crude oil market, we talked about this yesterday. We said we were sort of locked in this range between the highs, which was 98, and that is a fib retracement of 61.8%, and support right here at 94. We need to break out of this level, and we haven't done so today. But the market is actually slightly lower for the week, and I think that's something to be a little bit concerned about. But it looks to me like we're just sort of chopping around here in this range, and we need to break out of this range to get this market moving one way or another. But we have a mixed bag in terms of it's a minus 75, slightly favoring the downside because of the monthly, but nonetheless it's more of a trading range in my opinion. So let's clear the screen, go to our next market. And the next market we're looking at is going to be the euro. Well, this has been the big story today. There's the monthly trade triangle at 127.47. The market's closed trading at 127.89. It continues to get strong, and this is a surprise to many people, not ourselves, including ourselves. We've been short. In fact, let me just scope this out further so you can see this market in terms of, I've just got the monthly trade triangles on, and you can see you're going to go quite the ways back. Here's our last signal at 139.69. Here's today's signal at 127.47. So you can see, just looking at these markets, how long these monthly trade triangles are very powerful in this market. So when they occur, like they did here, boom, you want to be in them. So let's see how that plays out. Maybe things are going to change in the euro. It doesn't look as though they've cleaned all their positions out in terms of their problems, but the perception, again, is what is driving the market. So let's go to our next market and let's scope this in. Let's get a little closer for our next market. But that's a very powerful, a lot of short covering, a lot of new buying coming in, a lot of enthusiasm. Technically, perception is everything. So let's go to our next market. That's the gold. This is a phenomenal move in gold. We trade as high as 740.60 in the spot market. We're currently trading at 736. This is live, so you can see. And this is an excellent move. If you scope this out, sort of like maybe a 5-year, that'd be fine, or even actually just a 2-year, you can get an idea that the breakout we showed you just a few days ago from this trend line that we drew in right here. That's it, perfect. And you boom, it's gone. And this is the start of a move, not the end of a move. It's just the start of a move. And this is capable, I think, of taking this market into new high territory. I expect on this leg up, we'll see gold trade over $2,000 an ounce. So here's the number. We're looking for it to trade over $2,000 an ounce. So let's see what happens, but let's just clear the screen and go to our next market. And the next market we're looking at is going to be the copper market. This is a big thing too in the copper, so let's just go scope this in. The copper market basically has moved from a base, again, an energy field. We talked about these before. You've got a nice energy field built into this market, sort of going chopping. Remember, we said the 355 level was resistance. We blew through that today, and of course we're currently trading at 364.20, which is substantially higher for the week and also for the month as well. So you've got this market moving higher. You've got our trade triangles right here, all green, plus 100. We're in a bull market in metals. That's it. So the perception would be, well, if the economies are getting better perception-wise, then there's going to be more demand for copper. A lot of short covering. This is a decisive game changer today, just as the euro was a game changer. So let's scope that out, go to our next market. And silver, again, another really positive position in silver. You can see our monthly kicked in here at 31.31. It's currently trading at 33.59, 2 cents, $2 profit in that. Really looks good. And we're expecting this market to go higher as well. Looks very, very good for a weekend, 52-week high trade. Not so much in this silver market, but some of the other markets are lending themselves very, very well to that perception. 1 year, of course, you get take back. So we're not making a 52-week high. You want to be long on a 52-week high. Now, if we take out this level here, not today, but maybe in the future, then we're looking at this market really getting some steam and moving up to the 46, even the 50 level in the not too distant future. So moving right along to the Reuters Jefferies CRB Index. Again, this market's acting very well. It's definitely a precursor to inflation. If we scope this out and we take everything off the chart just to make it a very simple chart, just a line chart perhaps to be the best thing we can do. And you can see just drawing a very simple trend line in from the highs right here. You need to get the little yellow box in the box there, and just drawing a simple trend line in, you can see how it touches all the 3 points we wanted to touch right there, breaks out. If we put our monthlies in, you can see that's the weekly, excuse me. We put the monthlies in there, you can see they don't come at that often, and when they do, right here, right here, right here, right here, and now right here through the trend line. I think we're going to see inflation kick back. That's how they're going to get out of it, like they did in the 70s, is to inflate the economy, inflate and devalue the currency, and that's how we've managed to do it, this Houdini trick, every so many 30 years or so. So, hey, we've covered a lot. Look for those 52-week highs. You can use our tool very simply, and I'll show you how to do that. You'll go to our Smart Scan right here. And here's a 52-week high, tons of 52-week highs this weekend. So just click on this button and we can view them as bar charts or just a simple symbol list, which will show you. But you may want to put some of the last prices, let's say less than 50. And then you can scan for that. You maybe want the volume. I like volume on these things. We've got 500 here. I'm sure this is going to dramatically drop if we go to U.S. exchanges and greater than that. We've got 500. Let's see what it comes into. I'm getting 34. So you can see how quickly it really changes this. So Smith & Wesson, that's 52-week high there. Peregrine Pharmaceuticals, SunTrust, lots of things going on here. Kinder Morgan, Valero Energy, lots of stuff. Virgin Media looks like it's making 52-week highs right here. And you can simply click here and this shows you the chart. So let's take a look at Virgin Media. This is the Richard Branson company, of course, into everything. But that, again, that looks like a nice double bottom, a nice energy field capable of carrying this market higher. So let's see how, especially if you just go right along those tops, and you can see if the fact that we've broken out right here. We got our monthly trade triangles in there from 25, 53, it's 29.40. Obviously this market's going higher. I would say from the 22 level to the 28 levels, that's 6. You subtract this from this, 6, and that would give you 34. So I would think 34 would be a very good target zone for this market. Hey, I'm Adam Hewison. We've covered a lot this week. It's been a heck of a week for the beginning of September. I hope you all have a great weekend. We'll be back on Monday, so enjoy the weekend and be sure to take advantage of the 52-week high rule this weekend.